Hello and welcome to Business Incorporated. I'm Ladi Williams. Coming up today, World Bank projects between 2.3% and 3.4% growth for sub-Saharan Africa in 2021. And AFCFTA UNDP announced new partnership towards inclusive growth in Africa. Ghana successfully issues $3 billion Eurobond despite COVID-19 pandemic. Let's take a look at intraday market numbers now, beginning here in Africa, where major markets were in the red. The GSE was down by almost 1%, while the NSE in Nigeria fell 0.53%. The EGX30 declined by the most as the index shaved off 1.30%. Markets in Kenya ended Tuesday's session negative. And it was a different picture in the Middle East, where major markets were mostly positive. Saudi Arabia's index jumped the most by 1.88%, while the Qatari index rose 0.55%. In the UAE, the Abu Dhabi index was marginally higher by 0.03%. Only Dubai's index was negative as the index lost 0.32%. And European stocks traded in mixed territory today as investors chewed on key data. Conrad is standing by to bring us up to speed with more developments. Hello, Conrad. Great to have you.
Good afternoon, Ladi. Good to see you. And thanks for having me back.
Yeah, good to see you too. Yeah, so German share index DAX has climbed above 15,000 points for the first time. And this is while Germany's government is considering an even stricter lockdown because of the coronavirus pandemic. Where's the good mood among investors coming from?
You know, Ladi, once again, people on the markets are betting on a higher stimulus in the United States. The most sweeping stimulus since investment in America's space program in the 1960s, or the program in the 1950s, where the United States financed and built a network of interstate highways. US President Joe Biden later today will give a speech in Pittsburgh where he is expected to announce the spending of several trillion US dollars. To be more precise, he's expected to announce the first round of money, $2 trillion, to be spent now, and later in April he's expected to announce more spending on stimulus. The money is supposed to strengthen the manufacturers, finance better public transit, improving quality of life at home like clean water and broadband internet. Money is also to be spent for the elderly and on people or for people with disabilities. Now, all this is to be paid for with higher taxes and with higher government debt. In anticipation of this, the yield on the 10-year treasuries, the T-bonds, the benchmark bond in the United States, has increased to the highest level in 14 months, 1.78%. And that, of course, means that investors are pricing in inflation. At the same time, of course, nobody expects monetary policies in the United States to become any stricter. And this is, of course, the perfect environment for stocks.
All right. Germany's unemployment data for March, as well as the Eurozone inflation, was released today. Bring us up to speed on those numbers.
Yes, Germany managed the expected slight recovery on the labor market in March. The number of unemployed people here in Germany decreased by 77,000 to around about 2.8 million people. Still, around about half a million people more are unemployed right now than a year ago. So the situation still has to get better. It looks also like with the new lockdowns, many more people here in Germany are employed in short-time work schemes or so-called furlough schemes. This is also something that cannot go on forever. Now, inflation, consumer prices in the Eurozone are up 1.3%. That's an increase to the months before, mostly due to higher energy prices. years. Now, the European Central Bank, when it considers inflation for its monetary policy, is not really interested in energy prices. So we have to deduct that from the 1.3% inflation rate. And that means, of course, that the overall consumer price inflation is so low that nobody should even think about, higher interest rates in the Eurozone, a stricter monetary policy. And as I said, in America, the same here in Europe, a perfect environment for the stock market.
Indeed. Well, Germany's vaccine maker BioNTech has seen its share price rise more than 10% this week. What's driving this?
Well, BioNTech has reported very strong earnings for the fourth quarter, an increase in sales of more than 1,000%, from 28 million euros to 345 million. And thanks to this, BioNTech has managed a net profit, very solid net profit for the fourth quarter of 366.9 million euros. Now, good news also for people who are still waiting to get vaccinated. BioNTech and its partner Pfizer have announced that they will increase the number of doses to be produced to a capacity of 2.5 billion. BioNTech has installed new production facilities here in Germany, and it has found new partners, producers who will get licensed and who will then also produce the corona vaccine.
All right, Conrad, thank you for the updates. Always great to talk to you. Enjoy the rest of your day. And UK media is awash with Deliveroo's bad start as a listed company on the London Stock Exchange. The company shares slumped as trading started this morning. Let's get an update from Juliana now. Great to have you, Juliana. We talked about Deliveroo in the morning. How's it doing this intraday, and what impact has it had on the entire market?
Good afternoon, Laddie. Well, it's not great. I think investors have dubbed Deliveroo flopperoo, which is a little bit of a cold, hard slap in the face for the square mile and also for Rishi Sunak. I think the Deliveroo IPO, which, of course, as everyone's been saying, was supposed to be the biggest IPO in about 10 years since Glencore's listing in 2011. Over the past couple of weeks, we've discussed this quite extensively on your programme. Investors became a little bit lukewarm about Deliveroo. They weren't necessarily happy with the working conditions for its riders. So this morning, as soon as the float happened, shares plunged by about 30%, knocking £2.2 billion off its market capitalisation. Since then, it's stabilised slightly. Shares are selling. They're down by about 10%. And now Deliveroo wanted to float each share between £4.60 and £3.90. After all the controversy, they decided to going at about £3.90. It went as low this morning at £2.73, but it's up at about the £3 mark at the moment. Has this dented the all share? Absolutely it has. The FTSE all share is down 0.23%. The FTSE 100 at intraday is down 0.30%, and the FTSE 250 is down 0.01%. In the currencies market, there's a bit of a rally for the British pound, up against the US dollar by 0.25%, also up on the euro by 0.14%, and up against the Japanese yen by 0.53%.
Anyway, I wonder who's buying the sell-off. But do you think the fact that investors have shown Deliveroo will make them have a rethink on how they treat their workers?
Perhaps yes, perhaps no. There's been lots of comparisons, quite rightly, with what we saw with Uber a couple of weeks ago when the Supreme Court ruled that Uber taxi drivers were not contractors, that they were actually full-time staff. So they're now workers. But the only difference is this wasn't Uber Eats, which I think is really important, which is Deliveroo's competitor here in the UK. This was Uber, the classic Uber that we all know, that drives people around. So are they going to, are they not going to? They certainly have a lot of court cases to deal with in the European continent. In its IPO prospectus, they did detail to investors that they would be setting aside £122 million to deal with those upcoming cases. But the other issue, and I think this is a really important issue that appears to be missing, is the fact that some investors were also not happy with this dual class sharing status. This is newly adopted as Rishi Sunak has tried to provide a Silicon Valley-esque atmosphere in the square mile. We have a lot of competition since Brexit from Frankfurt, from Amsterdam and from Paris. So London wanted to become more accessible, which is why within the dual class share system, you do allow, even though your stock is floating, a CEO to retain some sort of control. Investors were not happy with that, especially considering the controversy. So if investors wanted to step in and ask the CEO to, change the rights for workers, they wouldn't have the power to. And I think that's really what has led some hedge funders to shun the IPO.
All right, before I let you go, some analysts think Deliveroo will face tougher regulations around workers' rights. Is that a possibility?
Well, possibly, yeah. I think, again, this is part of the equations. Deliveroo has had an amazing year. Most of the gig economy has had an amazing year. According to their last profit update, in January and February this year, the amount of orders are up 121% compared to this period last year. In 2020, orders amounted to £4.1 billion. This is 64% up from the year before. But with a lot of these online food takeaway deliveries, the profit margin is very, very narrow. And another major concern was if indeed a Supreme Court does rule that Deliveroo does have to change the status of its riders, is it going to be a profitable business? And only time will tell. But yeah, very sad day for Deliveroo's founders today. It was highly anticipated, but it has actually highly flopped.
Anyway, we'll keep tracking the performance. Anyway, thank you for the update, Juliana. Enjoy the rest of your day.
Thank you.
And shares in Asia Pacific mostly declined today as official data showed China's factory activity growing in March. In Japan, the Nikkei 225 shed 0.86% to close at 29,178 points, while the Topix index declined 1.21% to end its trading day at 1,954 points. South Korea's Kospi slipped 0.28% to finish its trading day at 3,061 points, while the Hang Seng index Hong Kong dipped about 0.3% of its final hour of trading. Mainland Chinese stocks were lower by the afternoon, with the Shanghai Composite down 0.43% to 3,441 points, and the Shenzhen Component shedding 0.79% to 13,778 points. Shares in Australia bucked the overall trend regionally as the S&P ASX 200 gained 0.78% to close at 6,790 points. MSCI's broadest index of Asia Pacific shares slipped 0.3%. U.S. stock futures were flat in early morning trading today after the Dow Jones Industrial Average slipped from its record level amid fears about rising interest rates. Dow futures fell 49 points. S&P 500 futures were flat, while Nasdaq 100 futures traded in marginally positive territory. The major averages were pressured on Tuesday by rising interest rates as U.S. 10-year Treasury yield notched a 14-month high of 1.77%. Bond yields have been on the rise this year amid a strong COVID-19 vaccine rollout and expectations of a broad economic recovery. The Dow Jones Industrial Average lost more than 100 points, falling from a record high reached on Monday. The S&P 500 fell about 0.3%, while the Nasdaq Composite dipped about 0.1%, as Facebook, Amazon, Apple, Netflix, and Microsoft declined. And oil prices rose in early trade today, pairing overnight losses a day ahead of a meeting of OPEC and its allies, with investors betting the producers will largely agree to extend their supply curbs into May. Brent crude futures rose 0.2% to $64.29 a barrel after falling 1.3% on Tuesday, while U.S. West Texas Intermediate crude futures jumped 0.3% to $60.70 a barrel after falling 1.6% in the previous session. The Organization of Petroleum Exporting Countries and Allies are set to meet on Thursday, following a month in which oil prices have whipsawed on concerns about extended pandemic lockdowns in Europe, slow vaccine rollouts, and rising COVID-19 cases in India and Brazil. pitted against growing optimism and growth in the United States. OPEC Plus last month surprised the market by agreeing to extend supply curbs with small exceptions for Russia and Kazakhstan at a time when fuel demand appeared to be recovering. And we'll bring you more stories from Africa. Do stay with us after the break. You're still watching Business Incorporated. Moody's, in its latest banking system outlook, has maintained a negative outlook for the Nigerian banking system. Moody's also released a report last week saying African banks' credit quality and profits will deteriorate in the long term if their climate change and environmental risk are not addressed in their governance, risk management frameworks, and business strategies to maintain credit quality and profitability. Antonello Aquino, an Associate Managing Director at Moody's, joins us now to talk more about this. Hello, Antonello. Great to have you.
Hi, Ladi. Thanks for inviting me.
Thank you. Well, the outlook update for Moody's maintained a negative outlook for the Nigerian banking system. What factors influenced this decision by Moody's, and what should the central bank and other banks be doing at this time?
Yes, we maintain a negative outlook for the Nigerian banking system. And the main reason is that we expect the bank's loan quality to deteriorate in 2021. And this is because the loan repayment holidays and other supporting measures implemented by the government and the central bank are going to unwound in 2021. So we expect that problem loans will increase to between 8 and 10% of total loans, for example, and they were 6% in 2020. And the fact is that the banks are exposed to large single name in terms of loans, as well as sectoral concentration. And so we expect, again, a deterioration of the loan portfolio in 2021. The other reason why we have a negative outlook is also the fact that we expect weakening capacity of the government of Nigeria to support the country's banks in case of need. And this is reflected in the negative outlook that we have on the government credit rating.
All right, Moody's also released a report on African banks saying their credit quality and profits will deteriorate in the long term if their climate change and environmental risk are not addressed in their governance. You mentioned some countries, Nigeria, South Africa, and DRC. What are the key issues with these countries, especially Nigeria and South Africa, which are the largest economies in Africa?
Yes, you're correct. I mean, we expect environmental factors to lead the deterioration in terms of the credit quality of the African banks in the long term. So if African banks do not take measures now to manage these climate-related risks. So what we have done, we rate around 50 banks across 14 countries in Africa. And what we have done a study of mapping their exposure to environmental risks. And we found out that African banks are exposed to environmental risk through two channels mainly. One is their lending portfolio that is particularly exposed to oil and gas and mining. And the second one is also through their outsized holding of government bonds. So when we look all in all for Africa banks, around 30% of their loan portfolios is to sectors that have moderate to very high risk exposure to climate change.
All right.
So you ask in terms of the banking systems more exposed, I think you're right. I mean, Nigeria and South Africa are the ones that tend to be more exposed to through climate change, given their lending exposure. So, for example, if we take Nigerian banks, they have substantial exposure to oil and gas borrowers. I guess this is not surprising, given the economy there. But we found out that 1/4 of their loan portfolio is exposed to oil and gas borrowers. So it's quite a heavy exposure for Nigerian banks.
Okay. Well, the report also says lending to environmentally sensitive sectors increases the bank's challenges, given these industries' high inherent exposure to carbon transition and physical climate risk. What sectors are particularly hit, and what is Moody's advising banks to do at this time?
So yes, and this is part of another study that actually we had done, we carried out last year. So we look across around 90 global sectors, and we have identified 3 sectors that are most exposed to climate change. So the first one is oil and gas. The second one is mining, and the third one is transportation. So clearly the exposure of these sectors to physical climate risk as well to transition to low carbon technology is going to be challenged. And clearly African economies are exposed to oil and gas and mining. And so in turn, also the banks in the continent are exposed to these, sectors, and so to the risk of climate change. When we look at Africa specifically, we also think that agriculture sector, there is quite a high risk to climate change. And that's because clearly there is a higher reliance on rain-fed agriculture in Africa. So clearly that, is more exposed to the changing climate patterns, depending clearly on the rainy seasons. So what we have seen in terms of the African banks specifically is that they generally take longer, they've taken longer to embrace the climate change risks compared to peers in developed countries. But what we do see is that they are trying to disclose more. So particularly South African and Nigerian banks are leading the way on environmental risk disclosure, and also start adopting sustainable energy policies, for example. So I think for me, the most important step is to disclose the risk, to discuss these risks, and with the publication of our report last week, that's what we are trying to do as well.
Okay, Mr. Aquino, thank you so much for giving us your time on the program today. Antonella Aquino is Associate Managing Director at Moody's. Thank you for your time.
Thank you, Larry.
And the World Bank is projecting growth in sub-Saharan Africa to rise between 2.3 and 3.4% in 2021, depending on the policies adopted by countries and the international community. This latest Africa's Pulse, the future of work in Africa, the World Bank says a second wave of COVID-19 infections is partly dragging down the 2021 growth projections, with daily infections about 40% higher than during the first wave. And the African Continental Free Trade Area Secretariat and the UN Development Programme have signed a strategic partnership to promote trade as a stimulus for Africa's socio-economic recovery from the COVID-19 crisis and as a driver of sustainable development, particularly for women and youth. The partnership will leverage UNDP's presence in all African countries, working in close collaboration with other UN entities, and includes direct support to the AFCFTA Secretariat through a financial grant of $3 million. The government of Ghana has made a successful debut into the international debt capital market, securing a $3 billion from an oversubscribed bond book value of $6 billion. With this, Ghana becomes the first sub-Saharan African sovereign to issue a Eurobond in US dollars since the onset of the COVID-19 pandemic. The proceeds will support the budget deficit by funding growth-oriented expenditures and conduct liability management on both external and domestic bonds. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.